And in three, two, one. Hello and welcome to another episode of Guide to the Grind. My name is Jeff Eady. Joining me, as always, is one of my favorite people, one of Canada's favorite mortgage brokers, and the Orange Julius to my '90s shopping mall, Mr. Jonathan Tilger. Jonathan, how are you today?
Oh, flashback to the 90s. I'm doing a little better than I was in the 90s. Let's just say that, and I'm doing phenomenal. Yourself?
I am having a fantastic day, my friend. You know what? I love doing this show. We get really interesting people. Today is no exception to that. But before we get started, I'm just going to ask you if you're consuming this media anyway, please do me a favor, like, share, comment, subscribe. All those things really help the algorithms and get the messages out there. So without further ado, I will introduce the operations manager at WebStreet, formerly Empire Flippers Capital, a dynamic individual with a wealth of expertise in passive investing, entrepreneurship, alternative investments, and remote work. With a background in engineering management and a master's degree in project management, he brings a unique perspective to the world of online business investing. His journey from the corporate world to WebStreet began when he discovered the potential of online businesses while exploring real estate investments. Intrigued by the opportunities offered by then Empire Flippers, he immersed himself in the culture and quickly realized that their approach to online business investing aligned perfectly with his goals. Recognizing the need for passive investment options in the online business industry, he joined WebStreet, where he now leads the charge in making online businesses a passive investment opportunity for accredited investors. Please welcome to the show, COO of WebStreet, Kyle Kuderewski. Kyle, how are you today?
Hey guys, I'm doing great. Appreciate you having me. Excited to
That's
get
uh,
into it.
that's the first intro that I haven't completely butchered all year, I think.
Yeah, well, that was well done. I appreciate it. Maybe sound a little more qualified than I am, but we can let the audience be the judge of
So, Kyle, typically we start out by just having you explain a little bit of about what you do to folks and or what you do.
that.
How about you just talk?
I was gonna say, Jeff, you saved the intro, but you're killing it now. Good work.
What we like to do to folks is we try to make them money. No, what I do is, like you said, I'm the operations manager at a company called WebStreet. We can get into the background of how we started and, of course, what we do. But in a nutshell, we make it possible for people to invest in online businesses. So we can definitely get into details of what those businesses are, but any type of asset that doesn't have a physical location. So websites, Amazon storefronts, apps, softwares that you use, things like that. And we do it in a fractional way. So I know people are familiar with different platforms out there where you can invest in real estate or art or wine or farmland in a fractional manner. We simply took that model and made it possible to invest in online businesses and hopefully deliver good returns for our investors. Is that a good recap for you, or in a nutshell?
Well, it's a good
Sense.
place to start for certain. So, okay, I have a lot of questions. How do you guys invest? Are you buying stock? Are you buying equity? How's that structure work?
Yeah, no, so what we do is we actually pair investors with what we call either portfolio managers or operators. So we have a large network of people that have built and sold online businesses over the years. And I can get into how we built that network. But basically, we pair experienced online business operators with everyday investors who want to get passive returns. Maybe they know about online businesses, but they don't have the time or they don't have the skills to run them themselves, and they want to take part in the upside. So what they're actually doing is investing into an SPV or special purpose vehicle where these operators go out and they buy these businesses. So if we raise $1 million fund or a $2 million fund, that might give an investor fractional ownership in two, three, four, five different online businesses. And those are actually run by the operators. So you know which operators you're investing in or what you're like, their track record, what their growth strategies are, things like that. And they go out and buy the actual assets. So you own a fractional piece of an asset through a SPV or special purpose vehicle.
So are you generally investing in, I'll just say, a startup business that has no revenue at this point, or is it an existing business, or is there sort of a mix of all of them that are in there?
Yeah, generally it's not startups, usually pretty much always existing businesses. So we do a lot of due diligence on these businesses. It's probably worth taking a step back. You mentioned that we started as Empire Flippers Capital. So Empire Flippers is a brokerage for online businesses. So over the last 10 plus years, they've brokered $500 million plus in online businesses. So Kyle builds a website, he wants to sell it. He might go to a brokerage like Empire Flippers, and they would find a buyer for it. Over the years, we continued to hear, instead of buying a business, can I just invest in one? And we always said no, right? It wasn't an option. It wasn't what we did. Well, after hearing it enough, we created a way to do that. So getting back to your question, these are businesses that people have built that generally have a long track record. Maybe they want an exit because they've built it and they just want to go retire in the Bahamas, or maybe they just want to do something else in their career and they want to sell the businesses. So yeah, generally they have long track records, and almost always we're looking at businesses that are continuing to grow. We don't generally like declining assets.
And what stage of the business are people coming in at?
Um, it's a wide range. So we have over 40 assets under management right now. So we've bought some that have shorter track records. It really depends on the operator, right? Like, what's his growth strategy? Is he introducing new products, or does he want an Amazon storefront that already has great products and he's going to introduce better marketing? They all have different strategies for how they're going to grow their businesses. And so that kind of determines what stage they're looking at.
So how do you guys vet through these businesses?
Yeah, that's a good question. So that gets into the realm of things Kyle doesn't do. So no, but I run the operations side of things. I can definitely talk about the acquisitions side, but that's kind of the other side of the company. But generally, when the operator goes out to buy the businesses, he does a buyer seller interview. So he gets to talk to them. He gets to see what the asset is and then really dig into the P&Ls. So what are the revenues? What are the costs? Is revenue increasing, decreasing? Is there seasonality in the business? How much inventory is typically kept? So really diving into the P&Ls and then diving into the niche, right? If it's a site in a pet niche, that's a pretty competitive one. Nutrition, supplements, things like that, pretty competitive. Doesn't mean they're bad, but maybe he wants to go out and do research on the competitors. How crowded is the space? How much are they already spending on marketing? I mean, there's a wide range depending on what their strategy is, but those are all the things that they're looking at.
So are you guys, and I just want to understand this, are you coming in and actually taking over the business, or are you going in with I'll say somebody new who's buying the business who needs additional funds to do it? So you got a new operator who's stepping in, who you're effectively partnering with to do so.
Yeah, it's more of the second. We as we being WebStreet, kind of, we like to say, provide a fund in a box. So we do all the investor relations, the legal, the taxes, the fundraising, and we help with vetting the businesses, doing the distributions for investors, but we don't actually run the businesses, right? The operators that we bring in, them and their teams, they're the ones that are going to run the businesses. Now we have some oversight. We make sure, expenses are in line. If they're struggling, we might get them help with, logistics company or something like that. We're going to support those operators, but we allow them to run it. So really, we're facilitating the investors, the operators, and us are three different parties, or ways to think about it.
Now, the operators coming in, are these people you know where you've got existing relationships, or is it somebody new who's approached you saying, I want to acquire this business, I've got this much to put in, and now I need $2 million for the balance of the acquisition?
Yeah, it's a good question. So the answer is it's a mix, but I can give you good examples of both. So because of the Empire Flippers days and all those deals that they had brokered, we have a strong network of people that we know, hey, this person's bought and sold 4 or 5 different sites over the last 10, 15 years. If they're still interested in running sites, like, let's go try to recruit them to be an operator with us. And then we have people on the, completely out of the blue, come up to us to apply to be an operator. And we have a very thorough vetting process. We don't bring on very many operators. They have to have business experience building sites, buying and selling sites. They have to have a certain, running a $200,000 business is much different than running a $1.5 million business, right? But at the same time, a lot of those operators, what they're looking to do is maybe they've sold a few $300,000-$400,000 businesses. They think their strategy will work at a bigger scale, but they don't have the capital to just go out and buy a $1.5 million business, right? So we might allow them to stretch themselves a little bit and provide that funding that they don't have. Sometimes they're just competitive individuals. They've built and sold many sites, and you and I might be sitting here thinking, well, that seems like a pain in the butt. Like if you made that many exits, why do you want to work, or why don't you just retire? But we all know there's people out there that just have that competitive itch. So we have a nice blend of operators, and their reasons for coming on board are always different.
And along those same lines, would you take someone who, as you said, that person who, hey, I'm here, but I've got to scale up. Would you help that person who needs to scale as well? Or is it strictly for the acquisition and and sort of growth from that stage?
We definitely open to helping people scale. It's really a two-sided thing. So investor returns are like our top metric, right? Our top KPI. We want to deliver the best returns for investors, but we love helping the operators, develop their track record. And the last thing I would add on the operators there is a lot of them that we've brought on over the last 3 or 4 years, they've come back again as repeat operators.
So who's the right type of investor for this?
Well, first of all, we need, like, our current setup is for accredited investors, so that's bare minimum. We may entertain crowdfunding down the road, but at this point, accredited investors, people who are looking to diversify. Generally, we see a lot of entrepreneurial types coming in, people that are familiar with online businesses, maybe, maybe not, but people that are already invested in real estate, they're already, heavy in their 401ks and S&P 500s, and they're looking for another alternative asset class. We're perfect for those type of people. We don't want Timmy's college fund. We don't want to stretch anybody beyond their limits. So, you need to have some extra income or savings. But the other thing I would say is these are unlike other asset classes where you're waiting on appreciation. This is a cash flow play. So these businesses are cash flowing from the time we buy them. Yes, we hope the operators are going to grow them, and when we make an exit, you get to take part in that upside too. But these are we pay out quarterly cash distributions. So every quarter after you invest, that the businesses make money, you get cash flow back to your WebStreet wallet, is what we call it. And you can withdraw that to your bank account. You can reinvest it and do whatever you want with it. But it's a cash flow play, not necessarily an appreciation play. So cash flow diversification, and yeah, it's a big thing.
And can they use registered funds?
Yes. Yeah. So we have people invest from all over the world through different entity types, through self-directed IRAs, through, I won't say we can take just about anything. I've had some weird ones come in from other countries, retirement fund type things and stuff like that. It just gets complicated from a tax investor relations standpoint, but most of the time we can take we have people invest through trusts and in a lot of different ways.
So you kind of answered the question there. You said from all around the world, Canadians can invest in this, because Jonathan and I are both Canadian.
Yeah. Yeah. We have several Canadian investors that they generally like to, I'm gonna butcher it off the top of my head, but I think we have a lot come in and do like, is there a tax advantage through like C Corps or something like that? I think there's a way to, we have tax treaties with Canada and a lot of the European countries as well. So I don't want to butcher it on live on the air, but yes, we do have a lot of Canadian investors.
No, we have similar products. Like the Roth IRA is similar to a tax-free savings account. The 401k is more or less a registered retirement savings plan. Very similar.
Yeah.
And what kind of returns do you guys get for your investors?
Yeah, so our track record, I mean, it's not super long. Like I said, we've been around, we've got 17 active funds over the last 3 years. We're delivering 2 to 3% per quarter. So that's 12%, 10 to 12% on the year. Now, what that doesn't include is the exit of the businesses. So, and we haven't really touched on that yet, but they buy these businesses, they grow them for 2, 3, 4 years. That's the range, general hold period. And then we go back and sell the businesses. And so we actually have some assets that are for sale right now on different brokerages, but that puts us on track for 20%, which is what we projected from the start. 20% over the life, annual return over the life of your investment.
And is that net of fees, or is that
correct? Yeah, that's net of fees. That's net of brokerage, like commissions on the sale of the assets. That's all of that.
20% is pretty darn good.
Yeah, it's strong. What we don't want people to do is come throw a dart at a dartboard. You know, if you pick one individual operator, you might get 50% returns. He might get super lucky and buy a business that just, you know, doubles because of a Google update or an Amazon update. And then you might pick one who just adds the opposite, right? So we do want you to diversify across multiple funds. But that's what we're seeing. That's what we're on track for. And we're pretty excited about it.
So I kind of want to take a left turn here because it's still within your realm of expertise, but I want to know what an operations manager does.
Sure. Yeah. Everything the sales and acquisition people don't want to do.
All right, moving on.
No. So, actually, right now, so marketing falls under me as well. And as we grew from the Empire Flippers network, we're making a big push into to expanding our audience. You know, we wanted to get the product right. We wanted to get all our processes in place and get our good investor base in. And we're past that point now. So marketing falls under me, legal as well. So legal documents when you're signing for investors. Engineering is a big one. So we built a custom website, what we call our platform, where you can go and invest with just a couple clicks, where the money gets distributed directly to your accounts. And we're always adding new features to the website, tax center, quarterly reports. That's something I haven't hit on yet. But when you get your distributions each quarter, you get a report from the operator showing what sites, what worked, what didn't work, you know, all that type of stuff. And then taxes, which is heavy on my mind right now. We have to do individual K1s for all of our investors each year, which, you know, we're in the process of distributing right now. So that's most of it. And I guess podcasts as well.
Yeah. Well, I mean, if you're the marketing guy, yeah, that's fair that
Yeah.
you appear on the podcast. What sorry, there's a bunch of questions I want to ask still.
Yeah.
I'm just trying to figure out which order to ask them in. You said there's 17 different funds that
Hmm.
you've raised so far. How big are the funds that you're raising? Are they, and obviously they're close-ended funds when you raise them?
Yeah, correct. So we have 17 actives. I just pulled it up. We've raised about 40 million in the last, like I said, 3 years or so. But what we raise, we go to the marketplaces, we deploy, and then any money we don't spend, we give back to investors with interest. So we never want to buy bad businesses, right? Or invest or businesses that don't fit the operator skill set. So oftentimes we're raising funds, five, six, $7 million, and then we go have a 90-day acquisition period where we buy businesses and then we return any money we don't spend to investors. So yeah, in a nutshell, we got 40 assets across 17 funds. We've spent about $30 million. Some of those businesses are $200,000 range, and we have some that are over $1 million a piece.
And is there, as far as the diversity of the different types of businesses, I know they're online, but
Yeah.
obviously online is incredibly broad nowadays. Do you have any particular, I'll say, geographic regions that you're working with, or is it around the world? And any particular, I'll just say, types of businesses?
Yeah. Geographically, no, we're all over the world. But types of businesses we can definitely get into. I'll start with Amazon since that's kind of the giant in the room. We have a lot of fulfilled by Amazon storefronts, Amazon sites. We have Kindle Direct Publishing sites as well. We have recently, last year and leading into this year, we brought on several SaaS operators, so software as a service. We're recording this on Zoom. That's a huge software as a service, but there's much smaller ones, you know, CRMs, these apps you have on your phone, any service that you pay for that's recurring, and we all have them. A lot of them we've forgotten about and we're still paying for. That business model has been huge for us because it's recurring revenue. You can really project out. You're not counting on a purchase or a repurchase. Once somebody signs up, generally, you know how much revenue you're going to have throughout the year. And then last would just be actual websites. So content websites, any of these blogs you read or review sites where you're going to see, you know, top 10 travel backpacks or whatever product you're looking for. When you click on that link, if you purchase the product, that site is generally getting a small commission. So we have a bunch of content sites. They have display ads as well. Those are the popular models. And we have all of those in our portfolio right now.
So what kind of different where does the line differentiate online and traditional business? Because if you look at Amazon now, they have
Yeah.
massive distribution warehouses everywhere. True, they don't have a traditional storefront, but that's kind of a hybrid at this point if they own the distribution as well.
Yeah, that's very fair. So you had a lot back in the day, you had a lot of direct DTC, direct to consumer. So I could be shipping products, even though I listed on Amazon, I could ship it out of my garage, right? If it wasn't the Amazon FBA model. A lot of that has gone away. Most of everything you buy through Amazon now is not a product that's developed or owned by Amazon, but they're doing everything besides sourcing it. So I go find a supplier in China that has these pens and I list them on Amazon, and I list them a little bit cheaper than my competitor. I have them all shipped to their warehouse, but I never touch them. They store them, you pay the storage fees, they ship them when they do all of that. So I don't know if I'm answering your question, but even though it's a physical product with a ton of storage, we still consider that an online business, because the person they don't own a physical location. They're just depending on Amazon. Um, doesn't mean that that's the right way to do it necessarily. There's a lot of people who still make very good money with their own warehouses, but then they have to they have a whole team of people shipping and logistics, et cetera, et cetera.
Now, what about are you familiar with ClickFunnels at all?
ClickPhones. Um,
ClickFunnels?
ClickFunnels. Yes, 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 yes.
Yeah. So if somebody were to set up a ClickFunnel site, they're able to sell whatever product they're selling through that, and it starts to take off, like Alex Hermosi or one of those kind of guys. Those are the types of businesses that you would invest in aside from ClickFunnels.
For sure. Yes. Yeah,
Right?
100%. Yep.
Okay. Yeah, no, I'm sorry. It's a whole
No,
different
you're good. You're good.
subcategory here that's interesting to me, because Amazon itself is, I mean, anybody can buy it on the stock market, but it's kind of late to the game.
For sure. And on FBA right now, the fulfilled by Amazon model, a lot of people are just kind of having a wait and see approach. There was a huge boom during COVID. Obviously, I don't have to explain that to anybody, but it's a lot more competitive than it was 6, 8, 10 years ago. Everybody's driving each other's price down, and strategies are constantly changing. Amazon obviously takes a huge percentage of the profits, because they're doing a lot of the work, and because they're so big, they can. So that's one thing that's common across most of these business models, is there's like really, really rapid change. Google's always making updates. There's AI, obviously. It's always changing. So that's why finding the best operators is super important, because they've been around. They've seen 4, 5, 6 different iterations of Amazon or of Google search. But yeah, change is very rapid in our industry.
So saying that, with the change, the trends you're seeing, where are you guys leaning as far as the types of things that this is what we want to invest in now? Here's what we're pulling back from as a result of these changes that are happening.
Yeah, I'd say we're definitely in the category of wait and see on the FBA side of things. I mean, we have a few operators in sites in our portfolio that are performing very well on the FBA side, but we're being a little more cautious than we were years ago with FBA. Just the margins are so thin right now. SaaS, we're very bullish on. We've brought in some really strong SaaS operators, some that are used to do actual coding and developing themselves, and they have strong teams in place. And the SaaS market just continues to grow. People sign up for these products like you wouldn't believe. And then content, is a little bit of wait and see as well. There's such a big change with Chat GPT and people just cranking out lower quality content, and Google's really trying to cut back on that. But when they change their algorithm, it's not always perfect, right? They're doing a couple algorithm updates a year, and it affects all these content sites. So the biggest thing is, as I mentioned before, really finding operators that have a long track record, that are very much adaptable, versus just having a strategy that one strategy and trying to apply it across the board.
So how much is AI affecting what you guys do?
A lot. Yeah, a lot. As the ops manager, it's made several things easier in my particular role, but I think you're asking more on the sites we're running, or the sites our operators are running. It's affecting it a lot. It really forces the ones that are cranking out content. A lot of them have teams of content writers. They have to up their quality. They can't just crank out SEO optimized, blog posts and things like that. They really need to differentiate themselves from things that are created by AI. So it's affecting it a lot, but I think it's still nobody has nobody has it just quite figured out, right? What's the right mix of using AI written pages versus high quality content, or should you do no, which way do you want to go? So it's a lot of trial and error, but it's definitely it's changing things.
Do you think we're at like one of those huge stages in the online business world where, like, when the iPhone came out, everything changed. When the iPad came out, everything changed. When the iPod, when social media, there was a lot of big revolutionary things that happened between, say, 2005 and 2012, and then it seems there's been a lull for quite a while where things are
Yeah.
interesting, but nothing's revolutionary. And then some people are telling the AI is the next big thing, and then some people are saying, "Hey, it's a great tool, but it's not all it's cracked up to be."
Yeah, I feel like we are, but like I said, I think there's just a ton of people are still just not sure how to use it. At the beginning, there was all this excitement. It can do all this. It can do all these Excel formats for me. It can code for me, blah, blah, blah. But I know a lot of people just have it favorited in their browser and they haven't visited it in, months. So I do think it's an inflection point or whatever you want to call it, but I don't know that it's as what all the hype was making it be. I will say, one of the reasons I got into this industry, I mean, I enjoy investing, but I thought about buying it on a business, and then I eventually got into, um, came on with WebStreet. Is I do think it's really still early in the game as far as investing and how sites are going to generate money. A lot of people still don't realize all these sites they're going to, everything they buy, every link they click, every software tool they use, like somebody's making money off of almost everything you do on your phone or computer. And a lot of people don't realize that. So I still think it's very early, and I think there's a lot of money to be made in online businesses.
It's I don't know. I'm cautiously optimistic about AI. I am a little worried about the whole Skynet thing, but at the same time, I know it's making a lot of stuff a whole lot easier to produce content. Although you can't just rely on the content that ChatGPT. I've played with it to try and get it to write a couple of books for me, because writing a book is a massive pain in the ass, and it takes a couple of months. And
Right.
ChatGPT can bang it out in like 15 minutes.
For
But
sure.
I put a few different subjects into it, and it came out with exactly the same writing.
Yeah, you definitely have to be careful. I know it's gotten some lawyers in trouble as well, just by producing content that was just factually wrong. Yeah.
Oh, really?
Yeah.
Well, that's the one thing I've noticed because we've got a team and one of our guys sat there and so I'm going to use it to write a blog post and I read his blog post. Did you read this before you put it up? No. You got to read it because you got to make sure, is it right? Is that what you would say? I
Right.
mean, there are some phenomenal things it can do, but yeah, you've got to make sure that you double check the information.
100%.
So back to the actual funds themselves. If they're SPVs per capital raise, which one? Like, how do you guys? How's the structure
Yeah.
of the fund work itself? That's
Yes.
what I'm getting at.
Yeah. So we do them in what we call rounds. So right now is our seventh fund or seventh round, and it has three operators in it. As
Okay.
two SaaS and one that does content. Each of those operators, this one is going to be between a $5 and $8 million fund. I think we've got four invested right now. We'll probably go for another month. After we close the fund, those operators will each go out and buy one, two, three different websites. They lay that strategy out ahead of time. So like when you're investing, like this person only wants to buy one large site, or this person wants to buy two or three small sites. But that's how it's structured. We do them in rounds, and then basically we do one round per quarter. And we usually diversify those, or not usually. We always diversify those. You're not going to get one fund that has four FBA operators in it, right? We don't want them competing for the same businesses. And then B, we want the investors to have diversification. And the only other thing I should say on the operators and the fund structure is these operators are actually putting in 5% of the fund money themselves. So they have a lot of skin in the game. So if they buy a $2 million site, that means 100,000 of their own money is going into that investment. So they're both investors and operators.
And there's no like GPLP structure for you guys.
No, we really worked hard to align incentives and also keep it simple from a marketing and just structure perspective. So it's a 2/3, 1/3 split. So investors get 2/3 of all the profits, and the exit. Um, WebStreet and the investors get the other third, and WebStreet's 10%, and the operators are the 23. Now you got to remember they put in 5% of their own money. They're not getting any salary at all. So the other reason that aligns well, we think, is because we don't get paid unless investors get paid.
Hmm. No,
But
that's
yeah,
huge. It's
yeah,
extremely important to be invested alongside them as well, making sure that they make their money and they'll come back. Because if they don't, well, obviously there's a million other operators out there of different types of funds and all sorts of people vying for your time and money.
that's exactly right.
How long do the funds typically, do you go in with, hey, here's a set exit, it's gonna in year 8 it's gonna be sold, or is it kind of open until
It's a
the
bit,
operator?
yeah, it's a bit open. We market, and we yeah, I guess market's the right word, 2 to 4 years. It's definitely always going to be 1 year. You don't want short-term capital gains. So that would be the minimum. Um, it's just a lot of factors to nail it down. How is the business is growing or not growing? Um, has the operator pulled all the levers that he has in his team? Like, is his growth strategy complete? What is the market doing? Are multiples high right now? Are they low? Do we want to continue to sit and cash flow this business, or do we think it's done all the growing it got and it's going to start declining? Is the product that they're doing, is the niche that they're in, is it a growing or declining niche, right? So just a lot of different factors, but we're constantly evaluating all of our assets with the operators and saying like, all right, what do we think now? Is now a good time to sell? How long do you need? Blah, blah, blah. Because we don't want to, we do want to return initial funds and make strong exits. But say all that, say it depends.
That's Jonathan's favorite saying. And you guys got featured in a whole bunch of like Associated Press, Bloomberg, Yahoo Finance. Were you the one being interviewed in that, or did they just come find you and they talk to the CEO? How did all that work?
Yeah. Yeah, it's been a mix there as well. So I've spoken with a few of them. Um, both Empire Flippers and WebStreet have gotten a lot of press, both for I think TechCrunch as well, just because it is so unique what we're doing compared to just, another real estate fund. Not that there's anything wrong with that. I definitely invest in real estate myself, but it's just unique. So a lot of people are interested in the story. A lot of people, these companies were interested in our team, our remote team, and our remote culture because we've been that way well before COVID, and just kind of being distributed all over the world is pretty unique. Or it was. I guess it's becoming more and more common now.
Well, you just said you told us just before we came on here, you just got back from South America for 2 months. That's pretty great
Yeah.
way to be able to do business.
Yeah, it's fun. So we on the WebStreet team, there's about 15 or so of us, and I'm in America most of the time, but I got a coworker in Portugal. We have one in Egypt. We have some in Thailand. So all over. Um, as good as remote work is, it's really important to develop relationships, right? Especially when you're onboarding and training people. And then there's certain projects you just can't do remotely or you can't do well remotely. So once or twice a year, we get our team together somewhere fun. And this year we got the management team together in Colombia. The weather's great there. We did a bunch of hiking and dirt bike riding, and we did a bunch of work as well, at a co-working space, and then we flew down to Argentina and met the rest of the team. So did some hiking in Patagonia, we played some paintball, and did some work and strategizing there as well. So it was fun. Been home about a week now, so still getting adjusted back, but yeah, we like to have fun.
So saying that with travel and especially acquiring businesses, do you get boots on the ground to really check out the I'll say while it is a web-based business, they all have, I'll say, a home base somewhere. Do you get boots on the ground actually where they're located, or is that something that's not really necessary for you in this situation?
Most of the time it's not necessary. There are exceptions, but what we do like to do is we do like to meet with our operators. I mean, a lot of time, they're not employees, but especially if they're doing multiple funds with us, we like to go out and meet them, and we do masterminds with them. We do operator meetups where we get them together and just have some fun. And yeah, there are times where you need to go check in on just for business purposes, but that's more of the exception.
And how do you go about finding your investors?
That's a good question. I should ask you. No, the initially we had a huge base of people interested just from the Empire Flippers audience. I mean, they had a strong brand. Um, from just years and years of buying and selling businesses. They produce good content, podcasts, and different stuff as well. And then industry conferences. So we had a really strong initial base, and that's what we leaned on to start with. And we've really been working now to start to expand our audience. And the reason is we wanted to get a bunch of our processes in place. We wanted to get our website working well. We wanted to get all of our marketing stuff down, and we wanted to make sure our returns were good and our structure was good before we, you know, we don't want to grow too quick at the expense of quality. So we're past that point now. We're definitely expanding our audience, and we're going to a bunch of different investor conferences, all kinds of stuff like that, doing podcasts, etc. But like you mentioned earlier, I mean, there is a certain type of investor we're looking for. We don't want just anybody's money. We want it to be a fit on both sides.
Yeah, did I see you guys? Is it a static minimum or is it a per fund minimum of 60 grand?
Yeah, we do adjust it per fund, but the last two or three have been at 60 grand. Once the funds start to fill up, which this one we're usually our raises are 2 to 3 months. Once they start to fill up and we know we've got enough money to go, we'll start to raise that minimum. Just prioritize bigger investments. We do have, you know, for SEC, there's tons of SEC regulations and things, but one of them is with our structure is the amount of investors you can have in any one fund. So we couldn't have 250 $1,000 investors or something like that unless we adjusted our structure. So yeah, 60,000 is what we're at right now.
Yeah, I don't know about you guys, but up here it's I think 49 investors you're fine, but 50 you have to offer a prospectus.
Yeah. So there's different levels. I don't know them all off the top of my head. I know there's something at 100. Most of our funds come in around 70 people, something like that.
And do you ever have anybody that like invests and then all of a sudden they're a pain in the ass and they want out 6 months later?
Yes, but it's pretty rare. And I mean, it's just not a liquid investment. We're pretty upfront about that, and we want to be upfront about that and all the other terms. One day it would be nice if, you know, we continue to grow. It's something I should have hit on before when you talked about expanding the investor audience. We've done a lot of research into how big this industry is, and we think we can deploy $100 million per year. So that's where we want to get. You know, right now we have, like I said, about 30 million deployed. So it's a ways to go to get there, but that's where we plan to go. If we're at that point, maybe our place becomes more of a marketplace where if I do want out, I can sell my shares, you know, and somebody can buy them. But it's just not the case right now.
No, I think that's really cool that you guys are open to changing the model as you go and grow.
For sure. I mean, if we thought we got this right perfectly off the bat, yeah, we'd be fooling ourselves.
So how do you deal with those challenging investors when they want out? Like, do you just like flat out say no?
Yeah, I mean, there's been cases where we've had somebody invest and then I was trying to think of one recently. They wanted out pretty quickly and we hadn't even completed the raise yet. We let them out. You know, we're always going to try to do the best by our investors, but if the money's already spent and it's in a business, you know, there's really not much we can do about that. So
do you guys have competitors in this space? Because it's something completely new to me.
yeah. At this point, there's nobody doing. There's not. No. There are others that are doing. There's individuals that will just do a fund. Actually, one of our operators, he started an investment fund and he raised the money and went out and bought businesses. That was before he started working with us. He figured out how big of a pain in the ass it was, and he would rather grow the businesses and let us do all the other stuff. But so there's individuals doing it. There's nobody doing it at scale like we are. There's a bunch of online business brokerages out there. I mentioned Empire Flippers a few times. They're one of the biggest in the space, but there's others. Quiet Light, Flippa is a big one. FE International. So we do expect more competitors to come. We welcome it. It means we're probably doing something right, but at this point, there's not.
And how did you make the transition from being an engineer and project manager to the ops manager at an online business brokerage?
Yeah,
Sorry,
this is a
not
fun
that
one.
business investment fund.
Yeah. No, you're spot on. So yeah, this is a fun one. I mean, when I graduated college, I was, you know, rather broke like most college students. Got a good engineering role in corporate America, which I'm thankful for. Was, you know, give me a good start to life. But I knew that I didn't want to be in that world forever. So I really just worked hard to save money, and I knew I wanted to start a side hustle. Um, when I purchased the house that I live in now, it has a separate above the garage is like a little mother-in-law suite. So made a down payment on the house, spent most of my savings on that. So I needed to like start to make some more money, and I threw it up on Airbnb without much effort, and it just started to stay rented out every weekend. And I was like, whoa, okay, there's I live near the beach. It's like this market has a lot of demand. So I ended up getting into the vacation rental business. I still own some vacation rentals over by the beach um, that I have someone help manage that, I'm very thankful for. Um, Market continued to go up. So I didn't want to buy additional, there's a lot more competition now, et cetera. I say all that to say, when I was looking at vacation rentals and other side hustles, I learned about online businesses and I was considering buying one. And so that's why I kept an eye on this space. And when Empire Flippers started to do the investment side of things, and which ultimately became WebStreet, I decided that was a team I wanted to join. I wanted to work remotely, and I really liked their culture. I knew about them through their podcast and things like that, and that was three-ish years ago.
So this kind of off topic, more personal.
Sure.
How do you keep your day structured when you're working from home? Because
Yeah,
a lot of people just can't make that transition.
yeah, it's a good question. My biggest one, I still keep, even though all my stuff in a second monitor here and all this other stuff, I still keep a physical planner. So I write down my schedule
Wow.
every day with priorities. Um, this one's called a Panda planner, and it kind of says your priorities and then nice to dos and your calendar down the side and things you're grateful for, blah blah blah. There's all kinds of different tools out there, but that's my number one way. Um, at my previous role, I started really early, so it was a 5:30 a.m. wake up. I don't get up that early anymore, but I tried to still in the 6 to 6:30 range. Start out with a good workout, meal prep, all that type of stuff. But you're definitely right. I mean, it's not easy, and I'm not. It's not that there's not off days. Dog running around the house, or there's a water leak, or the grass needs to be cut, or something. Somebody's knocking on the door. There's definitely distractions, but having set up a home office, a dedicated space is very useful too.
No, that's huge. I mean, I definitely have challenges with it some days when there's, you have a whole day planned out and then all of a sudden something goes terribly awry and you're off doing something you find you're like, oh my gosh, I was supposed to be doing this and now it's not done.
100%. Yeah, I had a day this week where I told my wife, I said, I just need to vent to somebody. But today's one of those days where everybody's getting on Kyle's nerves, and that's not normal. That's not normal for me. So I had to call it out.
Lord knows we all go through those days. So, Kyle, we're coming up to the end of our hour here. Is there anything that you would like to leave our audience with? Anything that you think we've missed, or anything you find really valuable about this space that folks should know?
No, I would encourage, if the audience is obviously interested in investing. I'm sure you've talked about this before, but we've done a lot of kind of education and structure talk today and things like that. I think it's super important if you're interested in us or you're interested in whatever type of asset class to really get educated before you invest. So I always encourage people to do that. I know it's kind of um, boring or whatever, but like if you're not understanding what you're investing in, you're not going to enjoy it as much when the returns are good, and you're also going to be 10 times as frustrated when the returns are bad and you can't understand why. So get educated in whatever space you're investing in, and if that happens to be us, tons of resources out there, webstreet.co. You can also reach out to me and we can chat.
I think that is super important to stress is that a lot of folks will go to their financial planner and invest in something that they have no idea. They set it, forget it. 5 years down the road, look at it, and they're completely disappointed with what's going on, and they can't
Right.
figure out why.
Right. Yeah, it's a terrible feeling. So take the time to get educated. Now, you can probably go too far. You probably don't want to get analysis paralysis, but if you do, that's better probably than being undereducated.
Oh, heck yeah. Yeah. The worst thing you can do with your investments is set it and forget it. Now, the opposite is also true. Don't check it every day because that'll give you a freaking heart attack.
For sure.
JT, anything you want to say to wrap us up?
Yeah, so I'm just going to tie in something that I've recently been, I'll say, reading, which is actually Tony Robbins' book on the Holy Grail of investing. And he talks in there, I mean, there's a bunch of different things, but he talks about really investing in having part of your portfolio in uncorrelated investments. And I think what you guys have is pretty much uncorrelated with a lot of, I mean, it's uncorrelated with the stock market, it's uncorrelated with real estate, and just for those tuning in, what uncorrelated basically means is that it doesn't, when the stocks go up, this doesn't necessarily go up. When the stocks go down, this doesn't necessarily go down. So it moves at its own sync. And the advantage of uncorrelated investments is to just create more diversification, which increases or decreases your downside risk is the main thing. And so I think that what you guys are doing adds a very great uncorrelated stream that most people are not aware of, this to open up a different avenue to put part of their portfolio into. So kudos. That's awesome what you're doing.
Yeah, I appreciate that. And yeah, you put it perfectly. I'd love to add something insightful there, but that's exactly it. And I think we say that in a lot of our marketing and just our materials. It's a way to diversify, and it's an uncorrelated asset class. So you're spot on with that.
Awesome. Well, we're super excited to have talked to you today, Kyle. Thank you so much for joining us and
Awesome.
sharing what WebStreet does with us. We're definitely going to keep an eye on you guys, and we'd love to have you on in the future to see how it's going and what you
Yeah.
guys are working on next.
Yeah, sounds like a plan. That's it'll be exciting. And yeah, this hour flew by, so I appreciate you guys.
Yeah, no, that's awesome. Thank you so much. It's funny how fast it goes, eh? So thank you very much, Kyle. Thank you, Jonathan. Thank you for listening. If you have any questions, want to know more about what Jonathan and I are do, or get a hold of Kyle, you can always email me at Jeff. You know what? I'll give out my personal email address, Jonathan. I'm going to do that. jeffeady@gmail.com. You can always go to guidetothegrind.com or check out mortgageplan.com for more information about what Jonathan does. Until then, thank you so much, Kyle. Thank you, Jonathan. Thank you for listening. Well, have a fantastic day, and we'll see you soon.